assume around about 8 minutes or so. We'll be on the lookout for any commentary from Fed's boss Dick, to be speaking, but do note he doesn't vote until 2027. In terms of commentary from Bostic, we last heard from him on the 7th of March. Noting the economy is incredible flux and it's hard to know where things will land. He was also noting how if they do wait for trends to show up in the national economic data before acting, it could be too late.
Afternoon, everybody. Hello, hello, hello. Oh, had to get my coffee. Good morning. What a day, huh? How's everyone doing? How's everyone doing today? What's up, Max? What's up, Keto? What's up, Lucas? Schroed, Metal, Felix, No. Sunny South Florida. Nice. Sunny South Florida. What's up, Dee Dee? Mayor. How's everyone doing today? Hopefully well. Hopefully well. Let's take a look at the markets. The markets have been kind of running. I'm going to talk about a little bit about the psychology of these type of runs. I feel like we've kind of prepared for this as well as we could. I'll dive into that. We'll look at current market conditions and kind of see, hey, is this the bottom? Is this not the bottom? Which is ultimately we'll know in hindsight. We got to map out some key levels and everything, and then look at some individual stocks, because now is the time to start to, like, you know, if you were zero exposure in the markets, right? It's there was many things that were taking place to say, hey, yeah, we can start putting our feelers out there, start to get exposure. It's very common, right? If this is a bear market, it's common to have big bounces, fast bounces, aggressive bounces. And for some reason, they've been happening on Mondays, right? If you watch the last stock market brief, at the very end, it was like, we put out a little note there saying the big moves always come on Monday. Like it's been on Mondays for whatever reason. Mondays have been outsized moves. That's what we're seeing today. Big outsized move so far, at least. Give me a second. I'm just keep dealing with messages back and forth here. The mark is going up because I called for a bottom. I officially called for a stock market bottom. Too funny. Snowing where you live? Nice. Snow's nice. Is it sunny in snowing? Or is it like super, I guess it'd be somewhat dark. Okay, let's take a look here at the rally. And then we'll move forward. I'm just kind of keeping an eye on my chats here. And if you want to...
And see where the interview with Fed's Bostic on Bloomberg Television.
If you want
me to
pull up some individual names, I'll pull up some from my lists. But if you want me to pull up some individual names, make sure to drop them in the chat. I'll try to put them on the side. Little side note over here. I'm officially calling for a stock market bottom. It's too funny. What's up, old grumpy? Yeah. Yeah, Tesla was a big one. Definitely had some of that move. That was nice.
Fed's Bostic, just noting how there's a lot of uncertainty and that forecasting is now more challenging than in the past.
Market net flow. It's been bullish for the for the bulk of the day, but we really haven't actually gone anywhere today. So this is like one of those things we've been kind of saying, right? We've been talking about how the rally could be a bucking bronco, right? Bucking bronco meaning that, hey, what we kind of drew out, the prior day was, or over here, we said, be aware that you can see a quick move down, quick move up. And what have we done today? I mean, we started up high, we pressed a little bit higher, coming in a little bit. We're near that weekly implied move, all right? So we're well within expectations. We've hit the weekly expected move every week except for last week, right?
And do note,
and we're basically right there. I mean, this is a rounding area for the most part. We're talking 60 cents on a $500 product. Can we still get there? Obviously, yeah. So if you missed the rally, right? If this move scared you out, which
of where inflation is
makes
going to go
sense,
this year, it's
right?
pretty much sideways.
But this is just volatility. That's what it does. It does this and it does that. It goes back and forth. There's still going to be opportunities, right? You don't need to catch the exact bottom
in 2027
if you believe that this is the the bottom or whatever, right? If this is the bottom, there's still probably a high probability that we come retest lows at some point, right? Typically in bear markets, you get the most aggressive moves typically happen to the upside. And then, everyone kind of like rushes to get back in. Typically what happens here, it's like this. So I'm going to paint the picture. I'll paint the picture of what it feels like and looks like. And if you fall within the category, well, then just be aware of it and kind of adjust how you currently trade. But before I talk about that, a 5750 was the main 0-date level today, or 2 DTE level. And the thought here, if you follow on Twitter, was, we can go basically up to this, and then price will probably get pinned in and around there unless if anything really changes. And you could see here, this 5750, it's pretty much a pin. It's very large. It's going to be hard to break from it. Traders are reaching up a little bit higher. So, hey, 25 points higher, may come into play if market net flow conditions continue to try to, hold here. This is flattening out. This is going up. That can produce a move higher, a few points higher. Very possible, right? That 75 level would be where, it literally come right, if we can do that, that would be to the all-time high anchored volume weighted average price. This blue line is the month to date. And we got through that today. Nice little run. Gamma flip line is 58.21.
And Bostic, just noting how still seeing a resilient economy. But consumer sentiment
so we're still in negative gamma where you get these big pushes higher.
Is going to be a leading
selling
indicator.
Begets selling, buying begets buying.
He's stating he's hearing more concern about the path of the economy, but data has not shown that yet.
The Fed member talking right now. Can you hear the Fed member talking?
And Bostic was noting the appropriate path for policy has to be
Yeah, you should
pushed
be able to
back.
hear it, actually. All right, I see some tickers coming in. We'll pull those up.
He also expects inflation to be very bumpy.
Wasn't expecting these shot up overnight. Yeah, I mean, and that's typically how these things happen, right? You'll get a down move and people are like, see, it's so bearish. And then all of a sudden, like the next day, it's like, whip, boom. That's what happens in these, it just happens in volatile environments. And that's why I always say, it's like, you can't go too heavy, because if you got too heavy and then you had this down move, you probably got scared out of it. And then the next day it rips up. So you got to, like, once we had the follow through day and the Qs and the IWM, it's like, okay, now you dip your toe in, see what happens. Maybe you can add to it, see how, you know, there's many things that you could have done to just catch some of the move, but not like get shaken out by being too big. So this is what happens, right? So as far as like investor behavior goes, and I mean, I see this all the time, right? I get to see it from kind of my seat
And Bostic
in comments and stuff like that. But
pressures are moving
so we sell
higher.
off a little bit and like,
Also
okay,
bullish in
whatever.
sales.
This is a buying opportunity, right? So you get some people on Twitter be like, you know, they just buy the dip all the way down, right? They buy the dip, buy the dip, buy the dip, because we're at
And
all-time
Bostic says
highs.
that
They're like,
labour
oh
markets
yeah,
are
no, we're
still
going
tight,
higher,
not
going
as tight
higher.
as they were 2 years ago.
And then they start, then all of a sudden down into this range, and then well, it's tariffs' fault, it's Trump's fault, it's this fault, it's that fault. Not knowingly that it's like, no, dude, it's
Just that
your
wage
fault for not
pressures are
managing
not
risk
really
and going
outsized
too heavy,
relative to
right? So then you start to
pre-pandemic.
look to blame, blah, 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 blah. And
Says
then when
that
it comes down
businesses are
here and they're
expecting
basically
to
out
pass
of all their
tariff costs along.
positions, right? Then they start saying, well, no, the worst is like, this is like, it's not, you know, it's going to get a lot worse. Now we're going into the bear market. The next bounce is going to happen 2 months later, 3 months later. It's, oh, no, blah, 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 blah. And then sentiment gets extreme, right? And then what happens is you get a little bit of a bounce. They're like, oh, fade it, fade it, fade it. It's nothing because, you know, and then now all of a sudden they're from super bullish. Now they're like, every bounce, what they do is in your head, you're like, you don't believe it. You're just not going to believe the bounce. Why? Because it sold off this hard. You got torn up. Now you're out, and now you're watching it bounce. You're like, I don't believe it. Now I'm going to buy puts. Now I'm going to buy puts. Now I'm going to do this. Now I'm going to do that. All right. And then all of a sudden it comes down a little bit. They're like, oh, yeah, I told you. And then all of a sudden you get a day like today. Boom, you get follow through. Okay. Now they're like, oh, okay. Maybe well, no, now it's too late to enter in. So what happens is, right, they don't want to be patient. Now that goes up again, and they're like, all right, now I'm getting in, right? Then all of a sudden they become more bullish at a time when, after a very strong rally to the upside, what happens? They're like, okay, now I have to change. And when they finally get in, then you all of a sudden see some consolidations, and then all of a sudden you see some pullbacks,
Also noting
and
how
then
he
all of a
does
sudden,
focus
you know,
on the
it's
medium
always being on that
and
wrong
medium
side.
and long-term inflation expectations.
So how do you
Says
get
the
ahead of
reaction
it?
has been far less dramatic than seen in
How do you
the
get ahead of
shorter-end
it?
expectations.
All right.
Says he
I'm
is
gonna tell you
hearing
how
about
you get
labour
ahead of
shortages
it.
in some sectors that may be linked to tighter immigration.
I'm going to tell you how to get ahead of it. First off, understand this. The markets are going to go up and down regardless. All right. So somebody said, oh, so it's going to go up, down, and it's maybe going to go up. Maybe, yeah. It's actually going like
Congress to expand the TikTok sale
it's always funny when I hear
deadline
that
into a
because
letter.
it's like, no, come to terms that it's going to go up, it's going to go down. And in terms of high volatility, it's going to go up faster and down faster. Okay. So it's all about position sizing strategies in the grand scheme of things and protecting capital. So when was it? Okay. So if I go if I just use my zones, right? I can, if you're in the Discord, you can go into the zones and look at the picture that I post, the daily zone, and notice how the S&P 500 line is red. Go back to when it was green. Just scroll back. I'm scrolling back right now. When was it green?
He does not think that the Fed
Boom.
are going to be behind the curve.
Zones on right here, February 20. It said February
I
24th.
was also noting how the Fed has
And then
to
I made them
acknowledge
for
that
February
historically
25th.
tariffs
That
have
was
meant a one-time jump in
the
prices.
last time it was
But he
green.
says that's maybe
February
questionable this
25th was
time.
right here. So that's one indication that trend was broken. Look at my dog barking. Okay, but not only that, what else? We also started breaking negative gamma, right? And these are where I really like look into these time series and I watch gamma. But this was on February 21st. So February 21st was when? Right here. Where is it? Right here. That was February 21st when we broke into negative gamma. Now, why was I harping on this so much, so heavily over here? And I'll follow through up on all this stuff, but it's important to understand this. So February 21st, the reason why I was saying that we can have a bull trap is because we were getting so many overbought conditions, right? We were talking about, hey, this is setting up for a massive bull trap. That was literally the title of the video, massive bull trap. Well, because we were coming into the JPM collar, we kept on crashing into 6100 multiple times.
To move in one direction,
it was a huge gamma level.
It says it is better to be more patient.
Okay. And not only the various divergence that were happening from a greed sentiment standpoint, it was like the flip side of what we just saw down here, basically. Okay. And then we broke down into negative gamma. So, and then you look at the big picture charts. So we had to respect negative gamma. And then all of a sudden, the declining 5-day DMA, right? Daily moving average, the 5-day moving average. So two things happened there, right here. And then we also had a trend break. It was just like signs to say, hey, if you want to be, and then this whole way through, if you watch the videos, we said, okay, now we can start looking for a potential bear trap and look for key levels. And with that, we say, if you want to be patient and want to be tactical, or, patient, you wait for the 5-day moving average to start to flatten out, to turn back up, to give us a little bit more confidence. And then we add the element of being back in a positive gamma, right? So this entire move,
and
here was this 21st or whatever.
Focuses on getting inflation
lower
back to
highs,
2%.
declining 5-day moving average. So every time we come up to it, was a lower high. Then all of a sudden, we started creeping back above it. It started inclining. So we said, what? Hey, this is the early start to a potential change in trend, right? For the SPY, for the Qs, for the IWM, for
how that
all
if
of
the
this
economy
stuff.
does weaken, they will manage
right?
that when it happens.
Down here on this day, SPY made a new low. Look at what semiconductors did. It actually put in a higher low. So right here. Right? Right there. Boom, boom. Higher low. And same with the Qs. Put in a new low, but semiconductors gave us some insight. And semiconductors can be very well a leading insight there. So what does this mean? It means, oh, now I'm going all in? No, that's not what it means. What this means is now you start to see the smaller subtle changes, meaning that the market's potentially basing out here, okay? Then you start to look at other key levels of resistance up ahead. So we looked at the month to date, we looked at all-time highs. It came into it, it was rejected, right? There's a post on Twitter that I made and also here on YouTube and stuff. And we started rejecting, moving around, but nothing was really broken.
Recently, goods prices have risen. We do have to keep an eye on that, adding that service prices seem to have leveled off. The question is that if they are seeing a fundamental change in pricing behavior, but that is not his base case. But
holy moly. Okay. Where was I? So we get the directional 5-day moving average, and then we start to look into follow-through days, right? This is based off of just research from William O'Neill. It's important to watch that stuff, right? It's not like a holy grail. Nothing is. Okay? But then we started getting follow-through days in the Qs, right? Turn the drawings off. The volume up. And we'll look at individual names here still, okay? But it's important to know this, right? So you get the follow-through days in the Qs. It was like right here. That was your day one, right? That was like day 4 of the attempted rally. This was the low, and then you get 1, 2, 3, boom, day 4. And day 4 through 7 is when you look for that stuff. We got the follow-through day. There in the Qs, IWM, same situation. IWM, right? So if you're in the Discord, you probably saw me put a trade idea in on IWM because that was the one that actually broke the month-to-date VWAP, right? This was that was day 1, 2, 3. This was the boom follow-through day. Okay. Then we look at the SPY, and SPY, we've said basically you look for 1.25% or higher for the follow-through day. But the idea here on this day right here was saying, if you want to be unorthodox, you can technically count this as a follow-through day because it was up more than 1%, right? Up more than 1. I drew that wrong. Up 1%. And then the reason why I really didn't mind it is because the Qs and IWM did too. Okay. But a technical follow-through day is 1.25% or higher, with more volume than the prior day. So this is technically 1, 2, 3, 4, 5, 6, day 7 of the attempted rally. This one's a big day, but even this day would still say, hey, and even potentially this day where you close it, open at the lows and close it more higher, would be an indication to say, I can start getting my feet back into the market, right? If you've been protecting yourself this way through, or if you haven't been buying the dip, but your main portfolio has been taking a 10% haircut, well, and you've been holding off on buying the dip. Well, these are the days that you can start to potentially start to get back in, right? Or add more into the portfolio and so forth. It doesn't mean we're fully out of the woods by any means, but 100% of the times coming out of every correction and bear market, there's been a follow through day. That's just the reality. You can point to any correction, any bear market, anything like that. I can show you the follow through day when it occurred. Okay. But it doesn't mean that we can't have a follow through day and then come back down, right? It's about a 50% hit rate. So it's not that great of a hit rate, but it's still an important note that we can get exposure back in. Okay. So there's that. Let me turn this off and put my stuff back up on the screen. Coco's hella mad. I'm gonna turn this back on. Give me 1 second because my wife just got here. I'm gonna see if she needs any help with the groceries. Give me 1 second. Hey, what's up, Algo? I'm gonna put this up. Give me 1 second.
About the balance sheet.
I'll come right back. And we're gonna
says he prefers to stay at this balance sheet rundown rates for a while until they stop.
Be right back.
And Bostic was just noting how that slowing down the balance sheet's run-off rate so they don't go too far is appropriate. And do know Fed's Bostic did state he would consider selling mortgage-backed securities, but they have not had any conversations about it. And so Fed's Bostic has now concluded the interview on Bloomberg television. I was just noting how there's a lot more uncertainty in the economy and forecasting is more challenging. But did note that his dot plot moved to pencil in just one rate cut this year, and previously he had penciled in 2 rate cuts. And commentary now from Bank of England, Governor Bailey says we face a challenge to raise the potential growth rates of the economy and says there are strong headwinds. I just want to be aware of in Israel, the military says that sirens sounded in several areas in Israel following a projectile that was launched from Yemen. And BOE's Bailey says they must facilitate the growth of AI as the most likely general purpose technology which can move the needle on growth in the economy.
Oakley dokley. I'm back. Okie dokie, artichokes. Okay. So we talked about kind of the sentiment or kind of investor psychology there in the people that you don't want to be like, because then you're going to get sloshed around. So it's all about kind of just, not YOLOing, but actively, tactfully, at least from my perspective, from a swing trading perspective, to kind of really find out when the best time to start getting your feet back in and when to get out. And that's why market conditions, right? If you talk to any trader and they just like talk about their strategy, but they don't mention conditions of markets, like I don't want to say it's a red flag, but that kind of is a red flag, right? If it's just because one strategy, like it's funny because I've seen professional traders, they're like, they go through these spells and then they start blaming, oh, the market sucks. This market, no, the market conditions just changed. But if you have a strategy, it's always important to know the conditions in which your strategy works best for. And for swing trading, like it makes a big difference about market conditions. For day trading, it does too, because if it's a good swing trading environment, chances are it's not that great for day traders. Not all the time, right? And for scalpers, if you're like a quick scalper, it's way better, to know your market conditions when you're in a more volatile environment. But when things change and then you're like trying to day trade or scalp, but it's just choppy back and forth really quick and you're just getting frustrated trying to leverage in, leverage out, leverage in, you can get ripped to pieces. So it's sometimes really it's so important to understand that. And so how you determine market conditions is up to you. I know people that say, I use the moving average crossover or XYZ or the opening range or whatever the case is. If you find something that works that you can strategically say, my process works better when this is happening and it doesn't work as good here. And when it doesn't work as good here, stop that strategy and start one that does. Or back off and then move in when your conditions change. It's not about just like, I trade bull flags, right? Okay, because that means you can trade bull flags in bearish context. It means you can trade bull flags in chop. Bull flags technically work best in a trend because it's a continuation pattern, right? Bull flags typically work best if you have the trend helping you get there, right? Whether that's fractal too, like it could be short-term, long-term, and then you could combine multi-time frame analysis. So understand market conditions. And the way that I do that is pretty simple, right? I use the direction of the 5-day moving average. Like that's pretty damn simple in my opinion. But then the flip line for me right now, that's the bigger one. And then I start to add in a little bit of other incremental stuff to help me get a little bit more tactical, like on corrections and stuff like that. What we saw, I'll look at those follow-through days. It's something that I always track. Okay. I'll look at potential seasonality if it has an effect, which it has apparently here. It's been tracking pretty well. And various signal charts too, like bullish percent charts, like when things get oversold or overbought. I look at volatility, right? So there's other elements that you start to like look at and put together a bigger picture, smaller picture, and you go from there. Okay, let's look at some of these names. Okay. All right, let me go to Twitch. Hey, what's up, Exotic? Yeah, the squawk thing was annoying me. There's nothing really going on right now, so if something big moves, I'll maybe go back to it, but... Okay. CTA positioning. I mean, I use Gamma Lab for that. There's probably other services. This is CTA positioning right now. It's going to update. They're still massively short, like insane. So if this starts, like it's crazy. If they become buyers, that could be a big thing. But Gamma Lab, is what I use. On the pinned comment here in YouTube and Twitch, this service is crazy good. It's $15 a month. And then you could also, if you want to try it out, I have that MSD50 promo code that's on the pinned comment or in the description. You get 50% off, like $8, and you get a month. And you can pull this chart up, but you can also look at the 0-date stuff, systematic flows, COT positioning, which is, it's just well put together. Okay. My tick chart. Take a quick look here at the markets, just see if anything's going on here. S&P 500 pulling back a little bit. No surprise there, right? We're floating around that 5750, that kind of just big pin right there. So there's really not much going on at this current moment. Market net flow, still very bullish, but we don't have convergence. We're just capped at this level right here. If anything changes dramatically, you know, we'll pull it up and we'll look at it. But let's go ahead now and just kind of dive in. We're looking basically at about 57.75 for the highest end of this move today, and then being rather pinned at 57.50 kind of seems like the like what we're dealing with here. Okay. Let's look at some of this. You guys mentioned a lot of charts here, so I'm gonna scroll back here and look at some of this stuff. Okay, so Palantir. We're gonna look at daily and 15-minute time frame. So Palantir started to see a bounce. This was, I believe, on the tight list. A lot of the names that were on the tight list today, or sorry, when I posted them this weekend, were names that were selling off, but they started basing around and started getting back above that 5-day moving average, which I really liked. I need more time on my 10-day. That's fine. So overall, right, we're above a rising 5-day moving average. That's good. Price is just consolidating up here, right? So short-term consolidation, big move today, follow through. This kind of just looks like the rest of the market. So this highly correlated to the market. You know, my ideal thought here would be, can we pull back into and around this kind of value range up here? And then, you know, let the 5-day moving average catch up and reset back up. Sometimes on these face-ripping rallies, you close at the highs, you follow through another day, and you get more of a push, get more people excited, and then it starts to do the consolidation. So if you're not in it, I would prefer to see the consolidation versus, you know, just buying at these levels. But I would just be paying attention to key levels. Like, for example, if I activate this up and I'll draw a little drawing right here. I mean, 100 looks like a pretty key elemental level here. You can see that on this big gap up. Then we came back down to it. And then once we broke, we kind of flushed through it. And we're kind of coming back in here to potentially test it. So even through this and around up there, and then another level could be potentially, you know, up here with where this gap fill is, you know, where we closed at this day. And then once we got to this level, we had a pretty big breakdown from there. So in and around these levels would be a potential target area for Palantir. It might not be an easy move, but for example, if I was to create kind of a structured trade, and if like, nah, I just want a position right now sort of thing. You know, if you enter in a little bit here, right, I would say your ideal stop would be below this low. But the thing is, if your stop is down here at this low, this is, you know, your risk. Say if you entered now, and then, you know, the reward would be right around here for the first stop and then up here. So this, you'd be wanting to target up in this range to make it make sense. Because that's like, you know, 1 to 1.2 RVR. And it could go higher. But those, you know, you want to structure your trades out proportionally. So after a strong move, I wouldn't make a full-size position for a new trade. I would maybe a little pilot. And if it pulls back in and then starts to see strength, maybe I try to pilot in more and build into it, and then maybe update my stop loss at a swing low if that was the case. So it really depends on, you know, your style and how you approach it. But if you go too heavy too fast and it comes down here, that might get you out of the position unknowingly that, hey, we're still above a rising 5-day moving average, and it may take more time to get up here, but it might set back up again. So it's going to require some patience. One thing that I want everyone to be aware of is we're right there at the weekly implied move. So Mondays have been fast movers. Mondays have been seeing the moves, and we basically came up there today. Doesn't mean we can't expand through it or go through it. It's likely, very common, just like when we came to the lower weekly, it was very common to come to it and then just doodle around it. So if we come back down, we come back up, people, oh, and come back down, and then come that could literally be our week this week. All right. Now, a key level to watch for, too, because if these correlate very well, like if you're looking at Palantir and whatever else, that's very correlated to the S&P 500. If it comes back down into this range, like people were like, oh, the whole move got reversed. Who cares? That's an opportunity. Why? Because we're still above a rising 5-day. We're above the blue line, which is what? That's the month-to-date VWAP. If we come down here and then all of a sudden start seeing strength, that's a buy. That's a buy because it's shorter term, but it would be a pullback in a context of a chart on the shorter term frame that is starting to change, right? It'd be starting to change here. So, yeah, it's Palantir. Let's go ahead and go to TTD. Dude, actually, before I do that, I wanted to just look at Kroger really quick. Yeah. So consumer staples, right, have been good this year. And I just wanted to put Kroger on the map because this one wasn't kind of on the list here for on my trade ideas. It is flagging right now. I think that these will do better in the backdrop of a falling dollar, as consumer staples have been doing better on a falling dollar this year. So if the dollar is going through this kind of bounce, which we talked about on a brief kind of prior, it's a seasonal bounce here, time frame for a dollar. When it starts to maybe pull back in, if it follows that seasonality, these could come back up to these highs. And these are lower beta names. But I just wanted to call out that it is getting tight. I don't know if it's ready, but if we start breaking through these highs, that could be an indication there. So I just wanted to point that out because we're not out of the woods yet, right? We're not out of the woods by any means. So it's still important to keep an eye, not just on the high beta, rip your face off names, but also the names that have been doing good, like Coca-Cola, right? Coca-Cola. This was a huge play for me this year over here. That was a huge play. And now what are we doing? I mean, we're just kind of consolidating, right? Sorry, I'm getting off track on everyone's stuff. I just feel like it's important to call this stuff out because I always want to get ahead, right? I want to know what the next trade is going to potentially be. So if people are chasing Tesla here at 10% up on the day, if we close at the highs, we'll probably get follow through, probably to around 300 at some point. I would imagine that'd be a level to watch on Tesla, by the way. But if we start all of a sudden pulling back in the markets, I mean, pay back attention to the names that have done really good and now are pulling back. That could be some of these consumer staple names. Okay. TTD. That was recommended here, or not recommended. It was Varma. Varma asked for TTD. So the trade desk, this one's absolutely hammered. So we're getting a little reprieve here too, right? So these ones are short tactical bounces until further notice, right? So right now we based out. We're seeing a little bit of a pop go to the 5-day moving average. Look at it started to turn here, right? We saw strength, but if you chase the strength, what happens? Oh, you started to pull back. But where do we pull back to? Rising 5-day moving average. We kind of undercut it. Now we're starting to see some follow through. So would it be a good buy here? We might get follow through and come up to this gap fill about $60. Personally, for me, these things could run and they could run fast, especially if the market's going to be doing a bigger move. But I would prefer to see a little bit of a consolidation, and then I'd be like, okay, cool. Now I can have my stop under today's low, right, or yesterday's low, or wherever that might be. Okay, this low, and then go from there. So yeah, these names have been completely obliterated. Now all of a sudden we're breaking out of this consolidation. If you view it on the daily time frame. Right, so this is a consolidation. This is where it tightened up. So if you're going long right here, your ideal stop would be under today's low to play for follow through. And if that's the case, I mean, you could potentially target up to here. Or you can give it a little bit more breathing room, right? This could be your breathing room under the prior day's low. And then try to play it up here. So all that means is basically you're playing 1 for 1. You're just allowing for less risk on this downside move. You don't want to go full size position, this far down, right? You'd have to be okay with losing minus 7%, which if you are on whatever your position size is, cool. You can technically go, a little bit heavier if it was minus 3%, and then you're trying to target up to here. But chances of getting stopped out are obviously greater, being that your stop is a lot closer. So manage kind of the risk as you see fit there. All right, Google. We'll go through the Mag 7 names. Yeah, so Google, just breaking out of this little downtrend here, this little consolidation, nice little move there. I would say ideal level would be watching these gap fills up here. That's where we closed, and that's where we had this big break. And now we're kind of breaking back through that. If we go to the 5-day moving average, I mean, this was pretty clean right over here. So you see that little line on the screen. We saw this flush out, but the 5-day moving average started to flatten out. And then the prior trading day, this was pretty nice. We started getting very tight over here, and that end of day we saw this breakup while it started turning back up, and then today we had that follow through. So ideal here would be also, stop below probably, yesterday's low, or sorry, not yet, I keep saying yesterday, and or right over here. So that's what I'd be looking at if you're trying to get some exposure back in. Target. Yeah, this thing has been brutalized. catching the bottom in these names, right? If you thought this was the bottom, wrong. This was the bottom, wrong. Thought this was the bottom, wrong. Thought this was the bottom. I mean, this has been brutalized. Just look at the weekly chart here. This thing is just hammered. So not the greatest look. Once again, if you're trying to play for tactical bounces, okay, cool. 5-day moving average is flattening out. We're starting to break this little high over here. So now we're seeing a higher high. I haven't really seen a higher low yet, so I would prefer to see, you know, market come in or the 5-day moving average come up and then start to see strength from that and then feel a little bit more confident. Hey, yeah, we can maybe come back up into and around these 113, 114 little levels up in here that where we initially had that big, you know, big break. Well, once again, right, these are highly correlated to the market. These names are going up. In fact, look at the correlation in the market right now. Let's go. Let's go look at market index watch. Go S&P 100. 74 advancing, 27 declining. It's actually not that big of a correlation, but I think it was a little bit better earlier this morning. Okay. Okta, DDOG, OKTA. Yeah, so this one, these are more my style trades. OKTA. I mean, look at this. You have an earnings move, boom. You have a consolidation, follow through. I love that. And then we had another consolidation, boom, a brand new high. This is great. Just like if you can't catch the bottom, like when you're like, oh, if you thought this was the bottom, wrong. If you thought this was the bottom, wrong. If you think this is the high, there's a high probability of being wrong, right? So this is just now starting to break to another high. So ideal would be stop down here or stop down here and see if this trend can continue. But it had a strong earnings move. And even if you look at the volume on this, look at like, you've seen pockets of these green volume days that are pretty strong. Like these last two, we pull back, right, on lower volume. Then we saw these 2 trading days, boom, bigger volume, bigger volume. And then, you know, this day, good volume. The next day after that, right, good volume. So this is a pretty strong looking chart overall. You still got to manage risk, but yeah, these are kind of my style swing trades is when you get these consolidations and follow throughs for sure. Okay, so yeah, that one's clean. Nice pull there. OKTA, DDOG. Yeah, these all followed suit with the S&P 500. So if you want a higher beta to the S&P 500, but something that's correlated, you look at names that have been obviously strong positive correlations, and these have, because they've been going down harder. That means they're going to go up faster and stronger. Okay, so I personally wouldn't be trading this right now at this current moment, even though that I still think that the bounce can last. I would be looking for the consolidations on these smaller time frames and for the 5-day moving average to catch up, right? Maybe it looks like this. Maybe it comes up further, but then it starts to kind of, you know, flag out or do something like this, and then you start to break this to go up higher. That could be an ideal potential. But if I enter in here, like it's cool. Okay, maybe I go up a little bit further, but it's not gonna straight up. I mean, some of them can do this, but I'm not gonna chase that. I'm gonna look for the consolidations, or I'm gonna look for the pullbacks in a shorter term uptrend, knowing that we're in a larger term downtrend, right? There's DataDog. And there's a lot of other elements that I look into, by the way, right? Just so you know, like if you can pull up the daily time frame, let's pull up DataDog, right? This is immediately when I saw that, what I would do is like anchor VWAP to right here, right? Boom. So where can we go to? And we're going to potentially see resistance probably right here, 116. That's the break of this, whatever this was. Was this earnings maybe? Was that earnings? Yeah, that was earnings. So earnings VWAP right here. So yeah, I would say if you're long it, you probably want to hold the stop under the month-to-date VWAP or under today's low and play it into this earnings VWAP because you're probably going to get hung up in this area. But we can definitely move into there, right? It's very common to retest this type of stuff, right? Just like the month-to-date when we broke down, it's common to come back up to it and test it. That's what happens in downtrends. You get pullbacks. What happens in uptrends? You get pullbacks. Cool. APP, same story, right? So look at APP, VWAP up here, boom. Where are we at right now? We're testing that VWAP from that high. We get the pullback right into it. So is this the ideal spot to enter? No. Right? You want to see the consolidate. What would be really cool here for APP? Like watch this. Watch this. You see how you have this swing high or this high VWAP, swing low VWAP, and we held it right here. What would be ideal is if it actually does this, and this keeps on coming up, because then you get this contractionary event happen between these two volume weighted average prices. Brian Shanton calls it the VWAP pinch. And then if you break from this, right, you get an expansionary move and a break of an all-time high VWAP, which I think was probably earnings too. I don't know for sure, but so that's what I would be looking for, right? I love the consolidations, but yeah, this has also been a big, big player this last year. You get this earnings move, exhaustion gap, boom, down. But these things don't go down without a fight, right? If this is the all-time high and this is going to be the high for years to come, okay, but that does not mean that you can't see rallies back up to 480 and then come back down. Like you can have tops. The thing with finding bottoms, it's a lot easier to find a bottom than it is to find a top. Market tops typically take significant amounts of time. Bottoms do too, to an extent, but a lot of the times too, you can see, in these environments, if the Fed steps in or whatever steps in, you can see very quick, abrupt bottoms happen. But tops have always been like this process. A process. Palantir. I think we talked about Palantir already, so I'm going to just pull it up on here because I like using the VWAPs to give more context. We're right there at this VWAP, but I don't know where this, I think we actually might be above it now. Yeah, so we broke actually above it this prior day and saw some follow through. So Palantir looks a little bit more stronger here as we're kind of breaking through this. This was what? Is that earnings VWAP, I think, for Palantir? Yeah. We're kind of right at that level. So same thing kind of follows, like goes here. I would prefer to see some consolidation and then the break above, and you can easily come back in and maybe test up higher. If this is actually going to be playing into something bigger. You're going to have, it's not going to be an easy hold because volatility still is rather elevated in these markets. It's been coming off, which is nice to see it finally come off a bit here. It's going to come off more if we get above the flip line and hold it. But just be aware that since these are so correlated to the S&P 500, when the S&P 500 comes into key levels, such as their weekly expected move, and then all of a sudden they just get pinned right there, look for the names that are actually starting to uncorrelate and start to break further and move more, that aren't just correlated with the S&P 500, because the S&P 500 gets hung up and there's a strong positive correlation between whatever asset you're looking at, chances are your asset's going to get caught up too. Unless there's a catalyst to help snap that correlation, shorter, for shorter terms. Okay. What's up, Peter? What's up, Edgar? We did the gamma levels, Wolf speed. I don't know the ticker for that. Is it just Wolf? Is it WULF or WOLF? I can't remember. Here, and the other guy, is he on another stream? No, the other guy is actually, well, I guess technically he's another stream. It was a news feed. Yeah, biggest rallies coming downtrends. Yep, that's absolutely true. The rate of change of rallies come from bear markets, right? It's not like it's not necessarily the biggest rally, because the biggest rallies happen technically in bull markets because they keep rallying and they keep on rallying, but the fastest, most aggressive moves typically come in downtrends, right? Shorter term, faster rate of change. Whereas like bull markets, it's a long rally, but it's like the volatility's low, so you have like a little up day followed by a little bit of more of an up day, followed by a little bit more of an up day. Oh, then you have a little bit of a down day, maybe a bigger down day, but then you have just slow grind higher as you climb up kind of a wall of worry is what the term, a wall of worry or whatever. Okay, might have been covered, but what do you think about Microsoft? Yeah, Microsoft. What is up with Microsoft? Microsoft is flat on the trading session. I mean, not the greatest sign, seeing these Mag 7 stocks. If they're flat on the trading session, they're not moving with the rest of the market. There's a tension going elsewhere. Not a great sign, right? So I'd probably stick away from it. If the market's going to get some sort of move, I wouldn't want to be in the names that are like not going. So if I look at Microsoft, pretty big reversal, right? 5-day moving average is still inclining. So if we are going to start moving, I'd be watching for like these little trend breaks from the shorter term and maybe getting into it. But right now I'd be focusing in on where the strength is at and seeing if you can catch some of that, because Microsoft's a big leader. And if is it going to play catch up, or is it telling us something? Is it telling us a different story? That's yet to be seen. So I'd rather kind of have my eyesights on what is working right now, and then manage the risk on what's working and look for these consolidations and so forth. So give this one some time. Give this a little bit of time here, because it could very well play some catch up and make some moves. Tesla is clearly the outspoken one of the trading session today, but you can even look at Apple, right? It's up 66 basis points. Microsoft's flat on the trading session. So there is mixed stuff going on right now. Now, if you understand this, take a look at this. Amazon is up 3%. This one's actually consolidated right here, and we're starting to break out higher. So this looks pretty darn strong. So if you missed it, hey, what do you know? We're starting to move higher, probably going to come back for that 203. Let's look at the daily chart, right? It's a pretty big trend break right here. And the thing about communications, what we've been saying here is if you looked at the BP charts, XLY, right, communications, there's only two big players in that name, basically, and that's Amazon and Tesla, right? So those ones were depressed. So if we're going to bounce, you're going to see that relief in these names. So look at XLY today. Boom. It's up 3%. We knew this was going to happen because of those depressed readings. We didn't know when it was going to happen. We just knew that, hey, if you're short down here, probably a good time to cover some of that. And if you look at the Analyze tab and you look at the top holdings, there you go. 21% is Amazon. 12% is Tesla. Today's move is Tesla is pulling some weight today in the entire market. Right? We can't rely on Tesla every single day. So if Tesla all of a sudden comes up a little bit further, maybe up to 300, I probably would be focused more in on that 300 for Tesla. It sounds like a pretty good round number over here. Maybe a little bit push higher after seeing some consolidation. I think that's plausible. After being so brutalized down, we could see a pretty sharp move back up. Which, by the way, on the 19th, there was a massive, massive position in the dark pools. 1.2 billion. It's like, I posted it on Twitter. It's like so perfectly executed. I wonder what they knew. Pretty funny. I didn't just start streaming Spy Bandit, but I appreciate that. I've been streaming on Twitch, and I've also been kind of here and there on YouTube. I took a little bit of a break for a minute, and now I'm back. Sorry, I'm gonna kind of catch up on all these comments here because I've been looking at the older ones, pulling up these stuff. PMI wasn't bad. Was not bad. That's on RDW. What is the VWAP anchor quarter? The red. What is the red color VWAP? Sham, if you can, which chart? I think that's the default setting, so I just clicked it and it popped up. If you're talking about the SPX chart, this one, the red is the all-time high VWAP. Red is all-time high. Okay. RDW. Okay, we'll pull that out. Do you know Demark indicators? Yeah, I know about Demark indicators. It's honestly, I've met Tom Demark this year. And Larry Williams, they're good friends, and they were explaining the Demark indicators, and even for me, I was like looking at it, I was like, oh my gosh, like it just didn't, like it's just so, like if this high meets that low, then this is a, I'm like, okay, it's gonna take me time to learn this stuff because it's a lot going on. There is a service that they offer, because Demark indicators, you need to make sure that you actually have the Demark indicators from them. Because there are chop shop Demark indicators that are just not what they do, right? So I think that they have a service. His son was there, made a charting platform. I forget the name of it. Maybe you remember. Maybe you can tell me. That shows the Demark indicators for finding. Yeah, it has some of the Demark indicators on there. Basically the counts, which most people look at, like the 9 count, 12, 13, or whatever it is. I don't personally use them. I think that they look cool, especially in hindsight. If you go back and look at the charts, like some pretty good pivot points. And I know some pretty decent traders that use them, like, oh my gosh, why is his name slipping? I think I can't believe I'm forgetting his name. Dang, that's gonna bug me. Tommy Horton or something like, or not Tommy Horton, something Thomas. I forget. Horton? Maybe that. I might be swinging and missing here. I can't remember. Not Chris Cavaco. No, it was like Tom Horton, I think. No, dude, no, wait. Isn't that a donut shop in Canada? Oh my gosh. I am tripping out here. I can't remember. DR Horton. I'm getting all kind of things mixed up right now. I think his name is Tommy. Tim Horton. Tim Horton. No, that's the donut shop, right? Ron Walker. Ron Walker uses a lot of stuff, doesn't he? Tim Hortons. Okay, so I'm gonna pull up some of these names here. RDW. Let me go back to my Twitch chat too. A rubber duck. The key timeframes that I like to use for swing trading. I like to look at the 15-minute charts. That's more shorter term, but then also the daily is like the one that I look at. I look for price action to be compressing, and I like to buy breakouts when my market conditions are matching for it. And if you follow me on YouTube, Rubber Duck, I talk about like all my market briefs. I talk about that pretty much on a every video that I post. Okay, we'll look at Roku again. Tom Thornton. Is that it? Solve? I think you're right. I think that's who uses that. I think that's who I was thinking of. Billy Bob Thornton. You guys suck. Hella funny. Tom Thornton. I think Tom Thornton is actually. I think that's what it is. Solve. I think you solved for it for me. Oh, and Mayo. Yeah, it says Thomas Thornton too. Okay, there we go. That's the person that I guess I'm talking about. Thank you. Thank you. Good trader, level head, and I'm pretty sure that he uses those or Demark. There we go. And we'll look at AMD. Okay, so let's look at RDW. RDW, man, it's not really moving with the markets today. A little bit, it's up, but let's go to the 5-day moving average. Holding above it. It's starting to incline. Higher lows. So yeah, I guess, we can create some sort of a trade idea based off of what's going on here. These higher lows, that's all I'm highlighting here. Higher high, technically, and then we're kind of just doodling around. Not the greatest look, to be quite honest. This was a very aggressive sell side, like most of the market. And then we kind of broke above and it's just chopped up here. So if you go long this, right, the idea would be, I hate this slow drip higher too. I hate that. I prefer the slow drip lower and then the break higher. But I will say that this was an outside day, this was an inside day, and this got even more inside. So this is some very, very tight price action. And then today, boom, outside candle. So we're holding up. So we're in negative gamma. So what happens here on these things? Like if we're going to break higher, you can probably see some whipsaws before it kind of takes off, which is very annoying. But if you are long this breakout of this high, which we technically started there, the idea would be to have a stop under this low, which you would still technically, I guess, be in. That would be a way to kind of approach inside trading day. So low was 11.16. This was 11.16. So you had matching lows over here. Your stop probably would have been 11.15 or 11.14 on something like that. It's a very tight stop, meaning high probability of getting stopped out. But this is, this is going to lead to some big movements. These compressions are going to lead to strong moves. Unfortunately, in negative gamma, what happens here is when things get so tight, and when they break, they can break in a direction. They come back, shake everyone out, whipsaw people right back out. We've seen that too many times. So you just gotta, but by the way, you can always enter back in. So say if you go long here and you get stopped out, okay, whatever. If it comes down, okay, forget about it. But if it all of a sudden comes back up, you can always look to re-enter it too. So you just gotta be very meticulous on your approach and have a couple if-then scenarios. Like if I enter now, will I get stopped out here? If I get out, if I enter now, then it comes down here, I'll just get out of the position. And then if it comes back up and starts to break above XYZ level, I'm going to get back in with a stop under this low. A couple if-then scenarios, plan out the trade, and then trade that plan, right? Tim is the coffee. Yes. Yeah, AMD. AMD's finally getting the reprieve that it all needs. There's actually some interesting stuff over here. You know, you get some big volume days, like this close at the high of the day. That was on earnings after a bad day. Then you get another big outside day over here on some strong volume. Then even over here, you saw, you know, an up day breaking out of this consolidation with some good volume. Today is more volume. So this one could be on the radar for sure, that we might be trying to find some sort of a level bottom. I don't like entering in late into the party like this stuff. I look for those consolidations. Look for the consolidation. So even here, comes up, let's consolidate, and then go from there. But I mean, this one's been a very depressed player. So yeah, if the market bounces, this is going to probably find some reprieve. Maybe a key level to watch would be right around this. This was marked a pretty significant bottom there. It's like that earnings capitulation move. So if we kind of keep continuing to the upside, I'd be watching around this 120, right? So if you were to go long this moment, you know, maybe 120, but then your stop would be under today's low. So it's still like, you know, 1 to 1.3-ish RVR. And it could go higher. You just want to plot out like, hey, would it make sense to buy it here? And if so, what would the stop be? It'd be, you know, XYZ%. And then maybe an ideal level to update risk parameters could be if price comes up higher. You'd want to, I don't just get out at the target. I prefer to see my targets be exceeded. So you just need more data to come to those conclusions after you structure your trade. So Hood. Yeah, Hood. Yes, I mean, it's like the same thing with all these names, man. Same thing. We're above the rising 5-day moving average. That was, you know, the early turns were over here. Consolidated pretty nicely over here. Broke up higher, right? This is a big reversal candle. So if you're playing for like a move higher, could be just right around here. I prefer to see some sort of like, I guess that kind of works. Did a lot of chop throughout here and then kind of held, but then we broke significantly. We came back to this level right in here and we broke significantly. So if Hood is going to continue, I'd be watching that kind of $55 range for potential resistance. But I would still, once again, I want to see consolidations. Getting a little bit of consolidation here. Is Trump talking? I think Trump is supposed to talk, right? Somebody said that, like at 2 or something like that on Eastern Standard Time, maybe. Roku. Yeah, Roku was definitely on the radar for a minute here for me. I'll be watching for consolidations. I knew we were going to get an aggressive bounce. It was a matter of time in all these names. Hims, same thing. We'll see where that's at. But timing the bounce is always difficult and knowing when it's going to come. But yeah, Roku, this to me made sense. I feel like at a point we're going to be coming back up here for this once we get out of this kind of a rough patch. So we'll see when that is. But I'd still be looking for consolidations. I'm not too interested in playing the very first bounce. I'd probably rather see the higher low, you know, or the higher low, like wherever that might be, and then start to see how it consolidates to break back out on these names. Playing the first, like these first bounces, if you can get decent timing on them, they're very rewarding. But if you're late to the party on them, then you kind of get caught up, even though you might be right. It might just take a little bit more time, right? Can I tell you about the Discord? Yeah. Give me a second here. Yeah, my YouTube channel is just figuring out money. Ballistic. Yeah. Thanks, Ballistic. I still post pretty actively on there. Yeah, so the Discord, I mean, it's not an alert. So let me first start off by saying the Discord's not an alert service. I do it through Patreon. You sync your Discord up to it. That's where I post all the benefits, is in Discord. It's just easier that way. Patreon handles like all the billing for me. I don't do that. So they're the platform that handles it all for me. So I don't need to. That just would be too much. All right. In the Discord, you get all those benefits that are listed. Once again, it's not an alert service. I don't do alerts. I'll give my watch list out once a week. It's basically a big watch list of names that are kind of on my radar. And then I extract the names from there that are tightening up. So I'll give you an example of what that looks like this week for you. It's fine. I'll just share it. Log in. Where did I do with it? Where are you? I'm just gonna make a video of all the benefits in there, because I hardly ever talk about it, and I definitely should be, or have a video when people ask. I'll be like, here's the video of everything that's in there. I think that's gonna be the easiest thing for me. You know. So it kind of looks like this. The tight list, it's all the stocks from the watch list that are tightening up, and I just look for the names that are contracting, like ATRO. This was, one of the trade ideas that's doing all right today. It's just price action that's, typically consolidating, and we're seeing some sort of potential breakouts. AIG, right? Bro, I know it's small. It is what it is. ASND, right? Tight consolidations. Look at VRTX. Nice little tight flag consolidation. HEI, right? The higher low consolidating, breaking to new highs. Here's that OKTA, right, that we talked about earlier. That was on the tight list. Just setups that look like, because I always look for the names that are contracting to potentially try to catch the follow through and expansionary move. All right. But then also when it contracts, if it breaks down, kind of where to be out, right? Where to be wrong. And then you can always re-enter if you're right. So it's really kind of backing into that kind of risk. Look at Jazz, right? This is like a pharmaceutical play. This has been on the tight list a couple of times. It was flagging, and now it's kind of consolidating sideways here. TME, this is, I believe, a Chinese equity, if I believe correctly, but it's kind of pulled back. So I thought it might be on the radar for a potential move higher, even though, some China stocks are taking a little bit of a breather. Look at MRCY, nice consolidation right here after breaking out of this kind of longer consolidation. And it's in bullish context in the shorter term and medium term, above a rising 20 and 50 day, right? So then what you do is you kind of bring up the chart, you look at MRCY, and you're like, wow, actually it's kind of, consolidating here, right? So maybe if it breaks out, I can play to, try to play it up to there, right? And then have a stop. Where the stop would be on a breakout. It'd be right down here, right? And if it breaks down further, whatever, and if it comes back and sets back up, you can always look to re-enter. So this is one of the things that I offer in the Discord. I'm not going to go through all of them. Okay, so that's the watch list part. I put that in there once a week. Then I have a trade ideas tab. I'm definitely more active in trade ideas and better market conditions, but we post like on 319, right? I posted IWM, right? Then the 318, I did see that was more recent, like swing trade. And by the way, when market conditions change, I change it. I stopped posting too actively because I prefer to post more when things are a little bit better as far as conditions go. I'm not trying to catch bottoms. I'm trying to, play decent setups or whatever. And these aren't even alerts. This is just showing names that, like, you can go in the tight list and you can see all these trade ideas where they typically come from and post them. I post some trade ideas, like things that I'm like a little bit more interested in and like I might be taking. Actually, in fact, I've pretty much taken all my trade ideas that I posted as trades, but I don't talk about my position sizing. I don't talk about when I enter, how I go into it, how I will if people ask me, right? I'll say kind of what I do, but I want to refrain as much as I can from influencing people at all to make a trading decision. And the reason why is because you're never going to get better if you're being influenced by somebody else. You'll be too reliant on somebody else. So the idea behind this whole Patreon, this whole Discord, is to provide you with some of the tools and resources that I look at, that I use, and in any way, right, use the community, whatever, to kind of help you find your path, because everybody's path is going to be different, right? Everybody's. So yeah, I put some of the trade ideas there. Then the monthly, quarterly expected moves. So I like to know what the market's pricing in for a month, for the quarter, just to give ideas of levels. Like if you're swing trading, maybe you want to be aware that, hey, the S&P 500 monthly expected move, like, okay, for example, let's go to the daily EM. And I share some of this on, my market brief too. But like, for example, this month, March, we broke down outside of the month-to-date expected move. And if you understand this from a probability perspective, right, 68% of the time, we typically are going to tag these, right? But there's a probability that when we start breaking out of the standard deviation move, there's a likelihood that we come back into it. So we broke out of it, right? And this number, we got this at the end of February. Boom, we came right back into the month-to-date. And then I do the weekly implied moves, right? The weekly expected moves. This is just giving us, right? The market's it's the market telling us, it's trying to handicap what's ahead, right? It's a forward. I use it as a forward-looking indicator. The market looks throughout all the strikes, all the options data there on this particular asset, and then says based off, like, the market is a discounting mechanism too, by the way. So this is why I like these so much. Is it sees that we have earnings a week ahead, or it sees that we have CPI data, or it sees that we have tariff talk. It sees these type of things, right? And then it prices in an expected risk of range. So if we come up to it, right, then you start learning, like, how does price typically play around these levels? Is it in its safe spot? Is it XYZ? And that just comes with kind of time and playing with it and learning to kind of respect the levels. What happens if we break from those? Right, so those are the weekly expected moves. I don't just do it for SPY. I do it for a whole host of products, typically the ones that trade higher in options volume. So I'll look at like the Magnificent 7 stocks. I'll use some of the ETFs, some of the future stuff, and then some of the sectors. Okay, so there's that. And by the way, it's $9 a month. My zones document is based off of the indicator bridge bands. It's like a Bollinger Band, but it's a little bit more faster responding. And I like this. Not necessarily, I don't really necessarily trade based off of these too much. I know some people that actually really do. And the original developer actually sells stuff to RIAs, registered investment advisors. Like, he does services for them. He changes it up a little bit. But what I do is I extract bulk data and I produce a document that quickly allows you to kind of go through it and see things that are at the lower end of the band or the higher end of the band. And I do that like with currencies, with volatility, with global, with crypto, with China, with the entire S&P 100, right? So when I start to see like, oh, the dollar's at its higher end of its range, and then the S&P 500 at its lower, I'm like, oh, these are negatively correlated. That means there's probably a probability that these are going to start to regulate themselves back into the middle of the range. So it might be a good idea to start to look to, buy S&P 500 depending on its positive trend or not. So there's that. That's a zone document. And I'm not sharing it on the screen right now, so my bad, but whatever. Somebody asked, so I'm just talking about it. Yeah, let's take a look at the market really quick and I'll follow through. There's so much in there. SPY 15-minute time frame. Yeah, I think there's some talking going on. I'll put on my little Englishman in the background.
I will not have to pay tariffs as a result of their investment into the US.
It's tariff
Also
talk.
Stated that he may be giving a lot of countries breaks on tariffs, but he will be announcing additional tariffs over the next days
Trump
on
may give a
autos,
lot of
lumber,
countries
and
breaks
chips.
on tariffs.
And he did also
Trump will
confirm
announce additional
that
tariffs
for doing
over the
business
next
with
few days on
Venezuela
auto,
will be
lumber,
on top
chips.
of existing tariffs.
President Trump says tariffs for doing business with Venezuela will be on top of existing tariffs. So there you go. It's tariff talk. That's what's kind of pressing the market around right now. So there's the zone thing. As far as I have a little stock market indicators channel, they're really kind of just signal charts. But if you watch my stock market brief show, I like put the charts typically in here. They're permalinks if you want to see them, like the sale to shift tool, right? The beta or the CPC buy sell, kind of levels. The 5, 10, 20 timers. There's 31 just in that thing. Then I have the yield curve chart, monthly, quarterly expected moves. I got to update that. Advanced decline lines. I give all the bullish percent charts, but I've designed the charts how I like them and how I share them. And you can just permalinks to those, whatever. I have some scripts, right? So if you like the direction of the 5-day moving average, right, you can get that in there. this thing. This was, you know, I saw Brian Shannon share a photo of this online, and it's not like a buy or sell signal. It's just to help visualize it. And I was like, oh, dude, I got to use that. So I basically, I just had it built myself because he didn't make it public. So I just built it myself. But I shared I did it for Thinkorswim too. That was the original. I built it for Thinkorswim and there. So I just shared that. And then I have an IVOL bands indicator, which is based off of the volatility index of certain products. I may need to update that, and I'm working on a new one myself. Oh shoot, which reminds me, I was supposed to have a conversation with the guy, but I got tied up. We had to move the date. What else in there? Okay, and then this is the bigger one. I have the entire Trady Ticks Discord suite stuff. So Trady Ticks is a great service. That's this right here, all this stuff, right? Trady Ticks is like 70 or 80 bucks a month. I have the query channel, which allows you to type in all kinds of commands to get the charts, which is pretty cool. It's being used all the time in the Discord. And then I have like the bots, like the, you know, Scalp bot, Bullseye bot, Trady Flow bot, Large Sweep bot, Golden Sweep bot, Dark Pool bot, Insider bot, Analyst Grades, Stock Breakout bot. So I just basically bought the entire Discord suite, and I'm sharing that all in there, which, by the way, when I did this, all of a sudden other Discord channels that charge a premium to my service, they started adding it into because they had no other choice, right? As soon as I did this and I mentioned it, all these other people started doing it, and they charge significantly more than the $9. It's like 40, 50, maybe even more. It's like, well, now we have to add it because it's a pretty big value add. And if they don't have it and they're charging more, that's pretty lame, because it gives you market net flow. It doesn't look like this. It'll look like this. They don't do the convergence one. Trady Ticks doesn't allow for that. They do the momentum. So it'll show you momentum. It's just a different internal indicator, but basically the main bulk of the data is right here, and then tracking the parts or whatever. And then then you have access to the lounge, the party lounge, the day trading pit, the swing trading pit. Those are just community places where community hangs out. All right. Let's look back at the S&P 500. S&P 500 pressing a little bit higher. Let's take a look here where we stand as far as gamma goes. We said 53.75 was probably the higher end, if I remember correctly. Let's see if that's changed. FOM had it first. I might not have been the first, but I was definitely, as soon as I mentioned it, all of a sudden I noticed a couple of other people that I'm even friends with that I'm aware of. All of a sudden they added it in their servers. They're like, probably like, I gotta add this now. I mean, it's a great value add. It's not cheap. I mean, a couple $1,000 a year to add it in there. So I have to have somewhere around there. I can't remember the exact price, but I'm pretty sure it was like $1,500 for the year or something like that to add it in there. You're not bad, as long as you have the people that it makes sense from a business perspective. Let me see here, 2DTE. Okay, yeah, so right here is at 57.75. There's not much through that. So 57.75, 57.75, then 57.65. So, man, that's 25 points higher. 57.75. That would be pretty much at the all-time high VWAP. Honestly, if it comes up to that level, I might even look to do a little quick fade trade, little scalp. If we can get up there, maybe like just like a couple ticks here and there. Might do a little quick little trade there. See if we can create an alert. I never did an alert here on this crossing. It's just touching. I don't know how to use an alert service with this thing. I haven't messed with it yet. I know Trady. I know Trend Spider works. Whatever. Do you update the expected moves daily? Yeah. I post daily expected moves. Yeah, I have to. Yeah, because it's new options chain every day. So on the daily expected moves, I do. I included the Mag 7 now because I have my own calculation for it. So I do that. I do daily. I do. This is an indicator that I'm personally building out, that I'm working on. And so I included those in just like an additional add-on feature. And then for the daily EMs, I do basically the futures, you know, ES, NQ, Ruddy, SPX, which is the more important one, SPY Q, IWM. Those are based off of the options implied vol. Okay. And then I build out a zone myself, which is basically the upper vol band, which I've also included as far as a script goes. You don't need to do that. That's what I do. Just to give an idea, like a range of risk for the day. And you can see like we can break it, right? So we actually, typically it breaks and holds it if we do start the day above it, right? Because if you think of things in terms of like dynamic hedging, right? If the market priced this in, but then all of a sudden the market's wrong, I mean, what do you do? Like just like, for example, if we broke down significantly and you were in a position and it broke way down past your stop, like what do you do? Or maybe you didn't have a stop, but you probably panic, you probably get out of the position, right? And more selling, but get selling and so forth. So it's the same thing here. If you break above these ranges, it doesn't necessarily mean it can't come back through, but many times that I've seen starts above them, you get violent, fast moves. I mean, it's happened. It's happened. Dang, that's what's up. Oh, my back just completely snapped. That felt good. Okay, let me go back over to the Twitch chat. Mag 8 and add Palantir. I can add Palantir. One of the days, Nova, I went in there and I was like, anybody have a specific stock that they want me to put and include this in, I'll do it. And nobody really responded except for like one. So I just built out a list and I shared it. And I did put Palantir on there, but nobody really responded to it. So I just said, okay, it is what it is. I was about to do a value add. So if it helps, maybe I will. Thanks. Yeah, go Grimby. Yeah. Do I think the softer tariff announcement will rally the market? I mean, that's what's happening right now. Yeah. So for right now, yeah. I'll believe what the market does, right? I'm not going to try to prove the market that I'm correct. I'm just going to believe that it's correct. I guess like if you think the market's right or wrong or whatever, which is kind of stupid because the market just is the market, right? Made up of a bunch of people that are wrong and right. So if the market's going higher, you know, I'm all for it. And when things get extended, I'm starting to see signals. I'll be like, okay, I might calm down over here. And you know, that's where I try to find the pivots, take my foot off the gas, on the gas. It's not like all or nothing. It's like, you know, it's like driving, right? You're on the road, you'll speed up at certain times and then you're slow down a little bit. You might brake completely. Well, I hope you brake completely on the road at certain levels, at certain places. But then you speed up at certain periods too, or your acceleration's a little bit faster. So it's the same thing in markets. I don't try to all or nothing, you know, if I see it go down, you know, but it's in an uptrend, I don't slam the brakes on everything. I'm like, get out. Or if it goes up higher, I'm not like, you know, I'm not gonna like at the highs or whatever, I'm not gonna go full pedal to the metal, you know, right into a red light or a yellow light, or you get what I'm saying. I don't know. I don't even know what I'm saying, but hopefully you understand what I was trying to say. All right, Palm Tree. I appreciate that. Yeah, bumper cars. Bumper cars. If we can get a push higher, 575 here on the weekly expected move, it's happy place for the market. Day one, Monday, that'd be pretty big. Market net flow is supportive of the move right now. Let's actually look at convergence. Yeah, we got convergence. 573. Oh, we're above that level. If we can hold 573, that's a good sign. You don't want to slip under 573 right now. You want to hold 573 because 573 can press price through, right? It repels price. It's that 0 date level down here that I'm paying attention to. Big old 573 bar, about 50 cents above that, 60 cents above that. Price is above it. Price repels from it, okay? And you can get pretty exaggerated moves pressing from these green bars. When it's a red bar, you can, what they use, the terminology that they use is magnetize. Price can magnetize towards it. So right now, yeah, we're about 60 cents above that. That's a positive sign. Now, if all of a sudden we get a green bar that shoots up here and goes, you know, above price, then I'd use that as that potential resistance level, right? Like, hey, we come up there, just be aware that, hey, we can pull from it. Sorry, yeah, let's look at AAP. I remember you asked that a little bit earlier. My apologies for forgetting. AAP, This looks pretty decent. It's you know, very, you know, not the greatest trend for the year, but we are, you know, nice little tight consolidation here. So if we're going to start to move in like advanced auto parts, yeah, if you go long, right, pilot position, and the market conditions are changing, we're going to get a rally. You can easily potentially target up a little bit higher, and then your stop would be here. So for example, right, that would be the risk, and then your ideal target could be on this breakdown candle. That was pretty aggressive. That's still, you know, that's about a 2 to 1. And that's just to say, you know, I'm structuring risk based off of this. Could make sense. And then it can go higher, right? And then if you look at the 5-day moving average, we're currently holding above it. So yeah, I think that that's clean. You can definitely set up something. Just be aware that it's not the greatest trend, but it doesn't mean that we can't get pops up to the upside. Yeah, it looks fine. Let's go to the weekly time frame. I mean, even the gray, like look at the weekly time frame. This is clearly in a big downtrend, right? Very big downtrend. So you can get pops, but just be aware that most pops have been dropped. So yeah, you got to tactfully play it from these shorter time frames to make a little bit more sense, I guess. It's a lot different than looking at something like COMP, right, from the weekly perspective, or I think that it was this one from the weekly perspective. This isn't the one that I'm thinking about, but you can see 30 weeks trending up, 40 weeks trending up, 10 weeks trending up, right? And then we had this little consolidation pullback, follow through. But you can see over here, we had these nice consolidations while this was all happening, kind of building a longer term base. They call this, you know, the potential accumulation phase. This was stage 4, a decline. This probably back here was distribution. So you have stage 3, stage 4, then it goes to stage 1, and then you look for these stage 2s, the markup phases, and then it goes, back to doing what it does. And, just to go back to AAP, if I were to tell you, hey, what stage are we in right now on the weekly time frame, what would you say? You probably would say we're in a stage 4 decline. Why? Because the 40 weeks pointing down, the 30 weeks pointing down, the 10 weeks pointing down, prices below it. But you are seeing like, hey, there's a positive divergence here. Cool, yeah, sweet. That's true. There was actually one right here too. Boom, right there. And it popped up and then it dropped down. So, yeah. Oh, thanks, Steamroller. If you're new here, well, welcome in. Make sure to sub to the channel if you haven't done so already. I do not just lives. I do these on occasion, but I also do the market briefs. Got a lot of videos in there. You can always go back to old videos at certain key areas in the market and be like, what was he saying then? And what was he saying this time? And go back and look and like how, you can go back to see how I kind of handled it in certain situations and how I approached it and so forth. That's the thing about YouTube. Like I keep my videos. It's not like I'm deleting my videos. So you can always go back to the video and be like, what was he saying then? Like, so for example, if you go back to the last 10% correction in August, go back to those videos. Remember that big old sell-off in August? What was I saying then? What levels was I mapping out? And then map it to what I was saying here at this 10% correction. Was it a similar thing? What was I saying? I'd love to know. What was I saying at the high before the sell-off? Go back and look. I mean, I do it on occasion. I'm like, what was I saying back then? Because I don't remember everything that I say. I just have to kind of go back and visit, like, and kind of reiterate in my mind, like, oh yeah, I was looking at this. Let's see what that looks like now, and then let's go back. Yeah. That's what I do with my days. Well, let's go watch some FOM videos. Works every time. 68% of the time, it works every time. Thanks, Matt. $573 key number for bulls for SPY. Yeah, 573. I'd say 575 right here. We're coming up there. I might need to prep my little futures thing. Oh, man, I'm sore. Had a good workout this morning. Had a good old workout this morning. Got a few people out here on the Twitter space. Thanks for tuning in. Not many here. We got, what are we looking at like on YouTube? Which, by the way, it does help if you hit the little thumbs up, or I don't really know actually if it helps or not, but I would imagine it does. For some reason, YouTube made me get into chess. Apparently, I don't really know, but all my videos on my YouTube feed have been chess videos. I don't know why, but for some reason YouTube now wants me to like chess, and I'm just watching chess videos now, so it's even showing me more. I'm like, why am I don't even play chess, but I love it. So now I'm just watching chess videos for whatever reason. I haven't played a chess game for years, but I'm just watching chess videos. Like I don't know. I don't know. It's so weird. I guess I should start playing some chess. It's easier to buy the bottoms in the market than try it for a big sell-off. Yeah, Curtis, absolutely true. Absolutely true. It's much easier to find bottoms than it is to find and mark tops. And that's the thing. There's actually a chart that I shared a while ago on Twitter. I got to look for it. Basically, I just said everybody wants to catch the crash. I'll just kind of explain it on the daily time frame for SPY. Actually, no, it was the week. It was the monthly chart. It was something crazy. Let me go back to here. I'm just going to change this out to a month. Week, we'll go month. Or was it a quarter? I don't even remember. I think it was month. I think it was something like this. I can't remember. I think it was like this. I don't really remember, but basically all I said was, or maybe it was the quarter. I think it was the quarter because it was even bigger than this. Or maybe it was a year chart. It could have been a year chart too. It might have been a year chart. Just to kind of give more context. It was just, let me see, let me shave the year if this makes sense. Let me go SPX. Was it SPX like this? I can't remember, but basically it showed one of the sell-offs. No, it wasn't a year chart. Oh, max available. Let me see, maybe it was. Oh, it could have been this. It could have been like this. Basically, oh yeah, because this was 2008. I said everyone wants to catch this big crash. That's what everyone kind of like fantasizes about. That's that Hollywood effect, right? Everyone wants to catch the big move, but the real money is made here. It's made all the way up here. So people focus too much on these big drawdowns, which you can be tactful of like getting out before, you know, big moves happen. But if you're trying to make a lot of money on the down moves, first off, I mean, this chart alone will prove, like, saying that it's much easier to make money on the long side, right? People want this. Some people like fantasize about the big move crash and catching it and being the Hollywood effect, but the real money has always been made from the long perspective. Like the real money for the longer term, you know, investors have always been made from the long perspective. That's where investing comes into play, right? You get these this random people that might catch a huge position from a short perspective, make quick money very fast, and then they look for it again, then all of a sudden they go away, right? There's been people throughout Twitter that, you know, become very popular during times of panic, and then all of a sudden they open up a fund, no names in particular, and then they blow up because they don't catch the bottom, or they think it's going to get a lot worse. It doesn't get worse, and then all of a sudden it gets better. Right? There'll become a time where we go into a lost decade again, probably go 10 years sideways, up, down, everywhere. Yeah, but you need to just manage your risk as you see fit, and then play it. You know, play it how you play it. You can make money on the short side, totally possible, but just don't blow your portfolio up because of it. A lot of the times, long short portfolios, what they do, from what I've noticed, let me try to fix this. From what I noticed is. This is the weekly, and I'll do 5 year. Excuse me. From what I noticed, long shorts, they'll typically have short positions on, but they're like not as big positions as they are for their long trades. They're typically a lot smaller in size. All right. Excuse me. Allergies. Is that what we're getting now? Is that allergies coming back? Myra, your was liquidity today. It's all good. We all have those days. We're trading some 5D chess. Bought calls in ARK, DDOG, and Amazon on Friday. Closed them all today. I don't trust this bounce. Hey, good catch though. Good catch. I've seen once a chart of the S&P 500 performance. If you just buy the close, sell the open, versus if you just buy the open and sell the close. Does anybody have that chart or a link to it by any chance? It was crazy. It's crazy. Basically, in short, it showed that like if you're buying the open and selling the close, your performance is basically flat over the course of everything. It's like slightly up. But if you were to buy the close and sell the open, your position, your portfolio is outperforming like by a long shot. I think that's what it was. It was pretty wild. SPY tomorrow, right now, the expected move for tomorrow, we're looking at about $4 right now, but we don't know where the price is going to close and how that's going to look. But right now we're looking at roughly about $4, which by the way, is a lot lower than usual. So volatility is coming in. So if we look actually at product depth, take a look at the VIX backwardation, or sorry, VIX futures curve right now, well out of backwardation is what I meant to say. Started going, you know, this is what it should look like. We go into contango, right? This is what you want. They see fear out into the future. Everything's cool right now. Versus if it goes like this, you're like, panic over here right now, right? If you don't know what this is, let me walk it through you. You get VIX futures, right? The curve, right? If you go into TOS, you go to product depth, type in VX, VIX futures, right? And you can look at the curve, and there's a series here. You can look at the various contracts, right? Future contracts. You look at April, May, June, July, August, September, October, November. So that's what's being plotted down here, all those contracts, right, down here. And then you have the percentage of the VIX futures right here. So it goes from 18.25%, 18.6, 19, 19.5, and then it shows you where that specific contract is, right? So April is here, May is here, June is here, right? And what's that say? It just says VIX is lower here, and then it plots them out, right? So for those that don't know how to read those, charts, that's what contango is, and backwardation is this. Just jargon words for saying like, hey, we got problems here right now, or we don't. Here. Try to keep it a little simple. Because man, vol traders are crazy smart. They're insane. Too much jargon, to be quite honest. You don't even like. I guess if you kind of need to know basis, right? If you're a vol trader, like just look at the cost. Look at how much it costs to trade a VIX future, and tell me you need to be smart. Like you can't tell me that you can't be smart trading one of these. That's crazy. Just go ahead, go look, how much it is. Take a look. Look at the tick value. It's crazy. Gotta be smart. Pessimists sound smart. Optimists make money. I like that. YouTube recommended algos move between expansion and contraction. Wait, what do you mean exotic? Expansion. Is that a channel or something? 1/3. Oh yeah, there you go. Yeah, Palantir, about 1/3 for you for short long. Yeah, there you go. Okay. Oh, on the chess recommendations. Gotcha. Okay. NSPY. What's NSPY? Is that like a hedge product or something? Night Shares 500 ETF. I don't know. It's not pulling up. Oh, is it? You got to do $? Oh no. I don't know. Oh, nice, Shane. Oh, NSPY is they actually have a fund that buys the close and sells the open? Are you serious? Oh, that's kind of cool, Chris. Thanks for, it pulled up on your TOS, but it's not pulling up in mine. Yeah, it's not loading. Do you use the daily time frame or is it a weekly time frame? I can pull it up on the weekly. For some reason on the daily, it's not showing. I gotta look into that. Oh, it's called Night Shares. Does it have a history? Does it have more of a history than this? I gotta look at this. That's kind of funny. Doesn't really have a longer history, huh? Daily. Oh. I mean, look at it. It's actually kind of holding up this year. Wait, am I doing this right? No, wait a second. What am I doing? Is this even active anymore? Did they close it down? This is 2023. Is it a disconnected fund or delisted? I don't know. Move to February highs. RR. Please fix the second voice earlier in the stream. I don't know what you mean. I don't have that voice anymore. The second voice? I think you're commenting on the stream that's not live. I think you're watching it prior. And Spy got killed in the bear market. That could be. I'm not seeing the chart. I would imagine it could do good in bull markets. You get gap ups and camps. But did the Spy get killed too in the bear market? Or yours operating and now it's gone. It might be delisted. All right, let's take a look here. SPY is still creeping up over here, people. It looks like it wants to go for it. Let's go to the weekly implied move. NQ's holding up, strong move. We've got market net flow that's been very strong, positive. There's that magnet there that we're talking about, 574. We're there, and we're still above 573, so there's a magnet there at 574. Yeah, let's press through. That'd be cool. It's at a place, it's kind of at a happy place right now, but let's just go for the tag. Let's get it done with. Let's see here. 0 date, 57.75, 57.65. Let me connect back over here, and you can see that we're not too far from that all-time high VWAP. I think that's the place to watch here for. Watch for a little maybe push there. Boo. Doodle around there. That'd be cool. I don't know if we can get there. Hard to determine wanting to make that trade from a shorter term perspective, right? This is more of like a, hey, what else can we potentially look into now? I think it's probably smart to have some exposure into these markets and various names that are setting up. AMD, you think it will tag and sell? Press through. Typically what happens is it gets pinned. You'll get pops through it. It'll come back in, and then it'll kind of go back up to it. That's what happens typically that we've been watching and been kind of noticing from the lower perspective. It'll break through, comes back in, doodles around. That's what we've noticed. So from the top, I would expect kind of the same thing, right? Maybe it doesn't touch today. Maybe it takes today, then it comes back up, and then push back down, or maybe gets super excited and then comes back in. Right. But right now we really haven't had much of a consolidation. I mean, I guess this is part of it, but not much of a move today other than, this is pretty much chop, right? For the most part, we haven't really moved too many places since the initial opening move. So it's considered more of a gap ramp camp. You gapped, you ramped, and you camped. Yeah, AMD. We talked about AMD a little bit earlier. We were kind of mapping out this level, right? For potential resistance, like 122.50. You might want to pay attention to, and that kind of came in confluence with the lower day of this kind of reversal earnings move. So that'd be, if you're playing it, if you're along it. I don't like chasing these big moves, right? Even though if we close at the high, it's likely to get follow through. But if we don't get follow through and we can have just an inside bar tomorrow, an inside bar of some sort, then you can maybe play the contraction up higher. Right? I'm not going to chase a strong move like this, right? I'm gonna wait it out and see how it consolidates, right? On specific names. I prefer playing the consolidations, and then hopefully it breaks out in my direction of the trade. Sorry, Giancarlo. I don't know what. Sometimes people get notifications, sometimes people don't. I don't get it. I really don't. I don't know why. Because you can have notifications turned on, and even people that do sometimes like, I didn't get notified. Like I don't understand it. No, I don't get it. Colby, I'm always looking for a huge red candle. Today I was looking for a press higher. I thought it'd be kind of nice because so if I'm looking, like I'm talking like a very short term, like scalp trade, like nothing crazy. Like I'm going to be in and out sort of thing. So if I go to the tick chart, right? Let me go to the minute time frame. I would like to see like just an exaggerated move up here past 1,000. That'd be cool. But then also I would like to see maybe up here at this VWAP from the all-time high, and then maybe scalp for just a few points. I've already traded today earlier before going to the gym, and I'm not looking to try to turn back all of those gains. But if I can maybe pick up a couple hundred more from just a quick scalp, I'd be open to it. I'd be open to it. That's interesting. Yeah, I don't know why I didn't give the alert. That's kind of annoying. MLGO is pumping. Okay. I don't know what that is. MLGO. What is it? MLGO is pumping. That is a pump for sure. Shy forehead. That is quite the pump. Quite the pump. Quite the move. That was 30% move right there. What is going on here? This is definitely a stock that's in play. I'd be very cautious and careful buying it here. Now it's actually more like a short thing. Play it back down to a 12. That's a mover there. This was a nice little consolidation over here. You can't trade off the daily time frame, really. Yikes. But definitely when you get stocks that are in play, you can they're more of like a I mean, in my opinion at least, they're more of a day trading type of thing when they set up, right? You get a stock that has like news behind it. I mean, it's up 400%. That's crazy, right? But if you can play momentum, consolidations, and so forth. Yeah, you gotta be very careful on these things, because if you go too heavy, too fast, these things will just rip you to shreds. This was nice. I mean, right? If I saw this a little bit earlier, right, and saw that it was a stock in play, this consolidation was great. It's great. Now, that does not look all too great. $2,000 on that move. Nice. That's killer. What a move. Yeah, this thing might consolidate more and push more. Who knows? It's already up 400%. So you got to be a lot more careful during the expansionary moves, right? You get a lot more chop and whipsaws, but this was a pretty tight consolidation there. And then the volume that came in, right? If you pay attention to the volume down there, that was pretty strong volume. And then we got some more tight price action on lower volume. Then we saw a pop on stronger volume. Then we have this kind of, shooting star candle, which, typically indicates a time for digestion. So, I mean, even if this were to kind of pull in a little bit and volume dries up, you can have another press. Go to 15, right? And then you got to get a little bit more intricate here. Look at maybe at some level 2 data or market, market breadth. Nothing really stands out. 1289, 1285, some bigger levels there. 1285. I'm not going to trade it. I'm not trying to get super into that. I mean, but these are the names that I would totally be fine trading. A lot of flow. Stocks in play. Cool stuff. You feel like tomorrow will still rip? Yeah, I mean, there's no reason it won't. Right now, the thing is, people after a strong move, sometimes the market gets a little afraid to short into it, because after it's already sold off so much, you get a lot of people that are like, I'm not looking to short into it quite yet. And then you get other people that are on the short side that were super bearish. They're like, I don't believe it, right? And then there's always flip sides to all of that stuff too as well. But that's kind of my thought here is, I'd like to see how price kind of resolves around this all-time high VWAP. I would prefer this to kind of consolidate. It's probably not going to be an easy consolidation, but if it is, maybe shake somebody out like real quick, and then start to hold. And if we can break above that with some nice consolidation, that's another indication that, hey, this looks good to have more exposure maybe added back into the markets, other than what we saw with Qs and IWM that follow through day. Because if you did that, you'd be getting back above the gamma flip line, positive. You'd be above the all-time high VWAP. You got those follow through days. You got seasonality. Cool. And then if you're wrong, you have an idea of where to get out, and you get out. And if it goes down further, whatever. If it comes back up, you can look to add back in. Right? So you just manage the risk as you see fit. And you're going to deal with chop and whatever. Economic data for tomorrow. Yeah, let's take a look. What do we got coming out? 25th. I don't know. It ain't nothing like too crazy. Got some retail stuff. Case-Shiller. Fed talk. Am I missing something here? Durable goods on Wednesday. GDP stuff on Thursday. Friday. Yeah, Friday stuff is, bigger. Personal spending, personal income, core PCE. I mean, yeah, should take profit and avoid the chop. It depends on your sizing, right? If your size is too big and you don't want it to come back down, you don't need to so the way that you manage risk, because you got to do it you got to choose how you see fit best for yourself. But the way that I look at it, there's a couple of ways to manage risk. That's stops, right? So update your stops by bringing your stop up. So that keeps you in the position, right? It'll keep you in the position. So if it goes higher, awesome, you get to be a part of that. But if it comes down, you're protecting gains with your stop. Another two is profits or partial profits, right? So if you take out partial profits, what you're doing here is you're locking in whatever gains you have, okay? And you're still part of it. You're still part of the move if it goes higher, but if it goes against you, you're okay. You're starting to now look, when can I re-add back in, on that. So there's partial profits is another aspect. And then there's three, which I do this one. This is a hybrid, right? A hybrid is a combination of these two where you're like, hey, it makes sense to update my stop and maybe I'll take off a little bit partial profits. But when you lock in a stop, you're already locking in something. So it's like locking in profits. You don't know if it's going to gap down or gap up again or whatever, but you can do a hybrid approach. And then even another top of a hybrid is if you're into options or things like that, there's ways to mitigate risk or hedge positions off, right? So it just comes down to your preference, right? It's always preference. See, pretty nice consolidation. So I mean, there's still this, but I don't know why I'm still looking at this. I'm not going to trade it. I'm not going to trade it. Every time if I keep my eyes on it, I'm going to want to trade it. Ooh, I can trade it. You've heard some mixed interpretation on retail data about a week ago. Thoughts? I guess we'll see what we get with these Red Book. I don't really have too much of a strong thought right now on the retail side of things. What I want to look into, which I don't know if it's out yet, is every quarter you get the consumer household credit and stuff report. And I always like digging through that and sharing it on my market briefs because it gives a good bird's eye view of delinquencies. Did it come out recently? It may have already came out, so maybe that I can bring up on the market brief today if it's the new quarter is out. But I like looking at that stuff because it gives me a good aspect of trying to get in the minds of a retail, somebody who spends money on retail. It gives things on autos, the interest, and then I like to look at some of the interest rates and kind of get a good sense of things. And a lot of the times when you have a good sense of things like that, you know what you can do as far as the opposite of what everyone else does to stand out, right? So if you want to be average, you can look at this data and be like, do I fall within this category? If you do, you're with kind of the crowd. But if you want to break from the crowd and, be in a better place, these are some of the things that you can look at and be like, this is what I got to do differently, but I'm doing what everyone's doing, or I'm not doing whatever, No fear of the 200-day moving average on SPY. I don't really care too much about it. I care about the direction of the SPY on the 200-day moving average. So my thought is here. So if I pull up the SPY, we'll pull up the 200-day. All right. We're there. I mean, so first and foremost, we broke down from it, and then everyone's like, we broke the 200-day moving average. This is where to get, you know, whatever. But in all reality, the 200-day moving average, it's still higher, right? It's still calculating up. So the trend of it's high. It's not like, and it's going up, right? So the trend of the 200-day is, in my opinion, is the trend of the direction, not where price is above it or below it. That matters to me because it's an average. But the direction of it's still calculating up. So once again, I don't think if SPY goes like this, back up to here, everyone's gonna say, we're back above the 200-day, all is good. But what happens then if SPY comes like this and this thing starts to flatten out? Then all of a sudden the 200-day trend is actually more neutral. And that is more of a warning sign to me, right? I don't like a flattening 200-day because that means there is no larger term trend right now. It's completely neutral. In this current context, it basically gave us a warning sign. It says, hey, cautionary here, but you know, it's still trending up, right? So if I actually show you what that looks like on the trend changer, let me show you. Let's just draw out the, draw it out. Let me go 200. All right. It was yellow. Why was it yellow? It's yellow because it's still calculating up and price is below it. So it's telling us, hey, early indications, there could be something wrong. But if you go back through history, let me see how much history I got here. We have 10 years, right? Take a look. Here's the last bear market. It got yellow, got above it. What did it do? Came back up to those levels, and then it started breaking back down. Okay, it came right back above it, right? It was still yellow, like it was still calculating yellow. There was this one day that it calculated red, but it was still yellow. Then it turned green, yellow again, give us warning signs. And then we started really calculating after that break right there, which was what? We had lower high, and then officially snapping down from this low after this move was this lower low in this kind of consolidation pattern. And then we started trending down. Then we saw moves up to a declining 200-day. So people right here were probably like, we're back above the 200-day, or we're back to test it. And then it rejected it right here. We're back above it, but it was still declining. It wasn't until here that it started to like, okay, we're above it, strong, still declining. So be cautionary, pull back into it. Then we started to see it turn green and flatten out right in here. So my thought here is, if we're going to turn into a bear market, right, you want to see this start to flatten out, then you'd be a little bit more cautious. But it move here, right? Remember, tops take time. Tops take time in these markets. People don't want to just give it up, right? So even a snapback, people are like, aha, we're back to all-time highs, or we're up on the year. Everything's great. And then all of a sudden you start to see this happen and this start to flatten out. Then it's like, hold on to your butts because things can change, right? But well, like I said, we always look at market conditions and so forth. So my point of all of that was the direction of the direction of the 200-day moving average to me, and any moving average in that fact, is more important than whether we're above it or below it. Hopefully that makes sense. Yeah, so that's a script, but this is actually not updated. So this is, see how these numbers are changing right now? The tomorrow's expected move. I made this, but see how it's changing? It's because we're not done with the day yet. I get my locked in numbers later. And that's just because we're still moving for the day. That's one of the things I'm trying to work out on all this stuff. This is a script that I worked on, okay? This is the levels up for today. Today's range was here, and we started basically above it on the trading session, which is good data. Which is good data to have. If you start above it, you know you could get moves like this. But come on, SPY, press up to the weekly expected move. Give it to us. Give it to us. Give it to me. 57.65 is the main level there. 57.65. That's a little bit higher, so we'll see if we can get there. It's changed a little bit. The green line's coming in a little bit here. We still have convergence. 574 is the magnet. We're right there right now. If red line flattens out and this green comes in, I mean, there's a possibility that we still come back into the gamma range at 573, which is $1 lower. Still chop. I would like to see the tag today. Just let's do it. Let's get it. Let's get it. Let's get it. Let's get it. We got all, I mean, we only got 20 minutes left in the market session. I'm probably going to actually call the stream. I didn't realize what time it was. I like to get a little air before I start to build out my stock market deck and do the video. So hopefully all you guys can tune into the stock market brief. I'm going to try to make one tonight at least. I got a couple of things that I see going on a couple of my screens here. I wouldn't mind talking about, but I got to get my thoughts together and put a deck together. So yeah, I think I'm going to call it a day. I was kind of hoping to see maybe a quick little scalp trade, just if we press higher into the weekly implied move and that level, just like a fast fade, nothing crazy, like a few points. Like I think I'm just gonna just not try to pick up pennies in front of a steamroller right now. I got that itch. I got the itch to just put on a trade while I'm sitting here, and I think I gotta just step away. I think that's the best thing to do. Yeah. But yeah, thanks for everybody for tuning in. Myra, AC, Colby, hopefully I said the name right. Daniel, Giancarlo, I appreciate you being out here. Sorry again for the alert. See ya, Eco, thank you. Nick, appreciate it. Everybody else, Brett, everybody that maybe I did not mention, Steamroller, got T-Rabbit, Generator, Old Grumpy Golden. I'll see you guys on the next one. Barkster, Palm Tree. Thanks again for everybody for tuning in. I appreciate it. Hopefully these help. Keep a level head, manage risk. That's all we got control of. I'll see y'all later on the next. No, later. Goodbye. See you, Chris. See you, Stig. Appreciate it. Appreciate you, Giancarlo. See you, Jing. Nolan. Toodaloo, 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 exotic. Bye-bye, Nick. See you, 69. See you, Joe. All right. I'm trying to look for the stopping streaming button right now. I was like, wait, where did it go? Imagine if I just like got off, but I'm still streaming. I'm just staring at the green screen like this. You guys get just inside view of what I do every day. I'm like, all right, I'm tuning out now. I found it. Yeah, see you, JT. See you, Joe. See you, Red Pill. I'm glad that you were able to catch it this time. See you, Jay. All right, bye, guys and gals.